Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 10th of December, 2008, and the market closed. The NASDAQ 100, the Qs lost a dime here today. They closed at 29.91, but I think it's pretty constructive action that we've been seeing in here. As the market consolidates right under this declining 50-day moving average, you can see the volume is trailing off, and it does hold above this prior level of resistance that we've been keying on, down near about $29.40 or so. Looking at a 10-minute time frame, we can see it a little bit more clearly that this is basically the level that we've been monitoring, 29.40 to 29.50. This level keeps getting hit, but it holds up and bounces each time. We do have a rising 5-day moving average that gives us a little bit of reason for optimism here that perhaps this market can resolve itself to the upside. The 30.50 level has been a short-term level of resistance for this market lately, and of course that coincides with, or approximately, with the two-thirds retracement of the election high back on November 4th to the lows that we had seen that Friday on November 21st. So we're up at that two-thirds retracement level, just underneath it actually, and the market holds up. So when you look at it on this time frame, this is this 30-minute time frame, we've got a bullish looking pattern here. It's got this low, these higher lows in here which held, and now this prior resistance is holding its support. So we have what appear to be two higher lows, and we've got this higher high. Now we need to take out 31. If it can get above $31 a share, and here's where we are basically, back with these highs. That's what we hit the other day. But if we can get above there, then perhaps we're going to go up towards this level here, just below or right around that $32 level as well. So I'm encouraged here. We had 2,175 advancing stocks versus 960 declining stocks on the New York Stock Exchange. So, once we broke this downtrend, we've seen these higher highs and higher lows. We have been getting choppy action intraday on the market overall, but it's turning into a bullish formation. Here's the 1 minute time frame for today, and here's what I'm talking about in terms of the real choppy action. Just a lot of back and forth with no one really gaining control here. We did have a lot of volume come in on that last minute. I don't think you really can read too far into that. But again, I think that breaking below probably about $29.40 and then $29, breaking below those levels will give us much larger reason for concern. So here's at about $29.40 to $29.50. This is the important level of support. Below that, it probably comes down, fills this gap, and then I think again you have to be more concerned, because at that point we would be below the 5-day moving average, and it could pave the way for another bout of selling. We are still in a primary downtrend, but we're seeing encouraging signs. So you've still got to just take it slow and jump on the trends when they reveal themselves. And I've been seeing and pointing out somewhat in the in Twitter, so in particular in the morning, some trades in individual stocks that are behaving better. The oil market today was up $1.36 on the USO. Traded massive volume in here, as did the DXO. You can see the DXO traded huge volume in here. We'll see what that means in the next couple days, but big volume typically, the biggest volume occurs near a turning point. The question is, are we going to have bigger volume tomorrow and the next day? We can't predict that, but if we look at the 10-minute time frame, talk about a choppy market. This market gapped higher. Let's take a look at the 2-minute time frame actually. It gapped higher, consolidated, ran up a little bit, then just got kicked hard in the teeth, and then a huge rally, and then another sell-off in here. So there's a lot of volatility. Volume and volatility both do tend to peak at turning points, but there's no evidence of the bottom yet. Perhaps this is part of the process. I think that this level here will be important. It was prior support right around this 37 and a half or so. I think getting back above there, maybe it starts to work itself higher a little bit, but just a real tough market to trade unless you're going to be in and out very quickly. I mean, because the stakes are really big in here, obviously, with this type of down from 36 and a half down to 34, 34 up to 37, 37 back down to 34 and a half. Just some huge intraday volatility, but it's done nothing at all to change the fact that we remain in a primary downtrend here, and there's still no sign of a bottom in oil. So just be careful with that market. A lot of people I know are trying to pick the bottom in there, but it's just not there yet. Russell 2000 also, still, as we've been seeing, holds above these levels from late October, early November, consolidating under that declining 50-day moving average. The volume is trailing off in here, but the market does hold its gains, so perhaps we're going to squeeze the shorts, but you got to be very careful in here. 46 is the more important level of support, as I had mentioned yesterday, so we continue to hold above that. We've got that 5-day moving average rising up in here to meet this market as well. Here's where we've seen supply come into the market at $50 a share. That's also this prior support, and on the daily time frame, approximately the location of that declining 50-day moving average. So $50 is an important level of resistance for the Russell 2000 on a 10-minute time frame. If we take a look, maybe getting up to past this 48.5, then we get another test of that $50 level. That's that's a nice little trade in there. But again, we're improving, but the fact does remain we're in a primary downtrend, so don't get too comfortable with your long positions. The semiconductors were down today. There was a nice trade in there that I had mentioned on Twitter today. But here, the $17 level, we had seen the breakout past these highs. It came very strong yesterday. It tested that level. This morning it pulled back a little bit, then had a nice rally and pulled back up in here, below pulled back down here towards the end of the day, but still holding this trend line, barely, I guess you could say, but we do still have higher highs and higher lows. This level will be important tomorrow at $17.15, and then of course $17. But like I said yesterday, I think that really, I said $16.75 yesterday. I think he can raise that up maybe towards about $16.80 or so. Breaking below $16.80, then it's likely that this move, we can consider it failed. So we've got a stage 4 decline, stage 1 accumulation, stage 2 markup, but on the daily time frame, we're still clearly, maybe stage 1 in here. So we've got a more neutral market on the daily time frame. 30-minute time frame, we're bullish. So we've got conflicting trends on different time frames, which means when you're trading, you take it slow and keep reasonable share size always. So here was that action in the semiconductors on the daily today, or on today's action. It was it was a much smoother trading market today. Initially, we had a little bit of sell-off. It recaptured the daily VWAP. That's where I got long in here, and I sold some right up in there, and I believe 1777 was, I think, where I'd sold it, and then breaking back down over here, I'd sold the balance, not here. So this is where I bought, sold some, and sold there, and mentioned those live trades on Twitter today. So hopefully you were part of that as well. But the semiconductors do continue to show some encouraging signs within, on the 30-minute time frame, which is generally, we can see rallies of a couple days in here. But below 1675 become a lot more defensive. The financials did close below $13 a share, and obviously that's a level that we've been watching closely. As I said yesterday, I don't think that it's really you're going to consider this market broken unless it's below 1265. Here today's lows were about 1261 or so. It's right on that rising 5-day moving average. We're also right at this prior little level of resistance. I didn't draw that in, but this prior resistance acting as support. $13 shouldn't be looked at too literally. It's more, support is an area. It's not an exact figure. We have diminishing volume in here. Nice little consolidation above this prior important level at let's call it 1275. And again, holding 1275 is really what's going to be more important for this market to potentially rally from here over the next couple sessions. And breaking below here, though, then you've got to just become much more defensive. The S&P 500 finally, this market was up 61 cents or 0.68%. We still see, of course, that this looks more like a bear trap, and that level is going to be important going forward. But we've got these prior highs right in here from late last week acting as support right now. We've got that same volume pattern below the 50-day moving average. And yesterday I'd pointed to the FXI kind of as maybe a guidepost of what could be happening in our market. The Chinese market continues to rally here, even in spite of a declining 50-day moving average. A declining 50-day moving average, the rallies will typically fail, but it doesn't mean you shouldn't participate in them, and they can't continue to move higher. On the 30-minute time frame, we're seeing that the significant resistance in here lately has been at about that $92.50. That's a little bit above where this two-thirds retracement is as well. I think we can stop drawing that retracement in, because right now the horizontal resistance right in here is what's most significant. The lows are these highs, and this gap continue to hold up. We're above a rising 5-day moving average. I think breaking back below, below this gap, and that at about 88 is where we would see real troubles. But today we were able to see that the market found support near yesterday's lows as well. So again, we're seeing encouraging signs within this primary bear market, but it's good for trading.